So let's get started and dive in. And as you can see right here, we got two structural lines drawn on our chart. And this is a very basic example on what it is. And of course, you will not see this in real life. Most of you guys know. So it's very basic Ethiopian version. And I go to draw a box for you guys to make it a little bit easier to understand what I'm talking about. Oh, I want a black. I'm gonna make it solid. Yeah, there it is. So we currently are in a trend, and we're not knowing in which trend we are because we're only seeing right now a low and a high, but we're not seeing any structure being broken. So we can confirm we're in a trend. So in order to confirm it, we need to break this structure or this point. I said structure, what I mean point. So this high and this low. So we got a high and a low, and we're not knowing which one is the strongest. So we didn't break one, since we didn't break one. So I'm getting my square, and I'm going to, so you see, boom. We get a closure above this line. So we currently confirmed our new low, and we confirmed we are in an uptrend. So this is what we are doing with swing structure. And as you can see right here, we got an internal structure, the green line. That's are the trends within the swing structure. So we call it a range. So let's get back and twist it a little bit. So this low to that high, we call it a range. So as you can see right here, so imagine we already in an uptrend right here, but didn't draw it out. We can say we had a pullback right here, which we got to change the character, and we can draw a fib. So this will be a range. So we draw the fib always from the low to the high in the uptrend, and from a downtrend to the high to the low, of course. And we always draw our fib from our ranges. And why we are doing that is to show where price is likely to retrace. So it's called Fibonacci retracement. So we can expect where price is likely to retrace. So we got two different zones in that Fibonacci. We got our premium and our discount. And when I draw it from the low to the high, this will be our discount area. And when I draw it from the high to the low, this will be our premium area. So we're selling from premium and we are buying from discount. So with that in mind, this is our range right here. And within that range, we got like an internal structure and we got a chalk right there and change of character. So we got like following like a high low, high high, high low, high high, high low, high high. And then we break that high low. So then we got a chalk. I'm gonna make it a little bit visual for you. So high high, high low, high high, so break this high, high low, high high, high low. We fail to break this high and we break this low. So there we got a chalk. So this right here we can call a change of character. So with internal structures, we can spot those pullbacks a little bit earlier than normal. Swing structure. So with that in mind, we going to catch our square. Where's my square? Oh wow, where it is? Oh, there it is. Going to move it to the right. As you can see right here, we could move there, and we had a small pullback. So we can say we have our new high right there. Tracing into our demand zone, and it will break this high. So to make it a little bit easier for you guys, I'm going to take my highlighter. This points are our strong swing lows. I mark it out green. Let me mark this one out. The white points are our weak swing highs. So in order to, because we're in this situation, we're going to trade the pullbacks. So we got a demand zone right here. Let me make it a little bit more transparent. Right there. And our price. Oh, did it wrong again. Always my biggest mistake with the Fibonacci. Came into our discount area. We had a demand zone right there. It reacted off. We get a smaller time frame. Change the character to the upside, and we're ready to go. And we can eventually target the high, since we expect the price to continue, and we expect our strong swing low. That's why we call it strong, to hold. And eventually we can target the high to take out. And when we took out the high, we can expect a new pullback, and we can repeat that process over and over again. And for more advanced traders, of course, we can trade those pullbacks, but it's not for the topic for for now. But of course, you can also trade those pullbacks, not only the reversals. So not reversals, but the end of the pullback. But yeah, this is a simple version of the difference from the internal structure and the swing structure. And now I'm going to move on to our real chart to show you a better example. So I marked out right here, we got a swing high and a strong swing low. So we expect this, get my highlighter, this swing low to be hold. These are strong swing lows. So expect price to not break that, because we are in an uptrend right now. So let me remove this one. This is for marking out my my premium and discount zones, and we only want to trade from our premium or discount areas. So, oh, we broke it right there. So what we saw right here was we shifted our strong swing low to this point. Since we got a break of structure, it was so high, it got broken. As you can see right here, let me zoom in for you guys. This candle was a closure above this high. So in that case, we get a closure above it. We can look for a new strong swing low. So we draw a box from here, and it will search out the new strong swing low. And in this case, there's this point. And after it, we got a new swing high. So we got a new range where we can trade in. And as you can see, price stepped into our premium area. And we also have a demand zone drawn out for us. So from here, we can search for buys. So let's see what it does. As you can see, it wicked through. So that's why I always use closures, since a wick can also be like a liquidity grab under it, and it doesn't confirm a new trend starting. So as you can see, reacting nicely, we broke several structures on the lower time frame, and we're going to continue. Tapped into our demand zone right here, wicked, spiked up, and eventually probably going to take out this swing high. Here we go. So we created a new swing low. Didn't create a new high, since we first need to have a pullback. There we go. This is our new structure, and tapped into our demand zone and was in our premium area. Tapped up and tapped into our order demand zone, went up. So this was my quick tour on our structure feature in this indicator. And guys, for you guys to really get a deep understanding is to get a course and dive into these subjects and get a deeply understanding of how to use it and how to approach it. And this is a very easy approach on how to look at market structure and how to use it with this indicator and why we build it. And so you not like misuse it the way it's built. So I put a few good courses into the description for you guys, so you can check the courses out and gain your knowledge on the smart money concepts and especially the structure forming. So hope you guys enjoy this video, and if you're interested in yeah, trading smart money concept with like a clear view of where your swing highs and strong lows are and your internal structures, you should definitely check out this indicator, since it will help you a lot, and it's helping me also a lot for spotting things I'm normally not really aware of, and it just helps me speed up the process when working with the markets. So yeah, guys, hope you enjoyed, and have a nice day. Bye.